Hello, everybody. We're going to wait a few minutes to let everybody in. Waiting for my co-host. We'll be going here shortly. Okay, everybody's here. We're waiting for Trent to accept his co-host invite, and then we'll get started. Thomas, can you hear me?
I hear you just fine.
Excellent. Just wanted to make sure. There we go. Trent, afternoon.
Afternoon.
Well,
Sorry.
welcome everybody to our Bermuda Spaces this afternoon. Trent, I think it's probably wise to not assume everybody knows what even Bermuda is. So how about giving us the briefest version you can do?
First two new retail asset classes since the ETF allows investors to choose their exposure to any underlying security that we choose to go out with, which means they could either choose an income exposure in buying the dividend certificate, which will trade at some elevated yield level, we believe. And then the other side is the asset certificate. That's for people who just want access to the assets of the company or the capital appreciation or depreciation, depending on whether or not the stock goes up or down in a year. But it's basically access to everything else that a stock has to offer. So if you think about what that means, is the asset certificate is effectively just the trading of a stock EX dividend forever. So yeah, that's basically what we do. We're trying to give choice back to investors, and yeah,
Yeah.
excited to bring this to markets and help change financial markets.
Yes, and so far we've filed trusts for Broadcom, Microsoft, and Apple. There are another 80 that we plan, 83. We'll stop and think about it. So, we will be coming to market with more than one of these at the same time because we never wanted to have people be excited about the concept and unhappy with investing in Microsoft, for example. So, with that, what's our news today, Trent?
Well, we have an auditor and we have an exchange.
Small details. So, for those who don't know, PricewaterhouseCoopers is one of the big four. Currently, now it means two of the big four are working on this project in one way or another. Deloitte being the other one, and I think it's safe to say there might be even one more. Is that true, Mr. Martinson?
Yeah, eventually.
Yeah, eventually. So, what can we share with the audience about the 5% restriction and our current application to the New York Stock Exchange American?
Our current application, I think Tom's better. Tom's better there, but yeah, I mean, look, for those who don't know how this works, exchanges are obviously underneath the SEC firmly, especially securities exchanges. So what you seek to do as an issuer is to exist under one of their existing rules. And when that does not happen, when there's not an existing rule that covers what you're doing in theory or practice, it takes 6, 7, 8 months for them to get a new rule. What was great is that there is an existing rule under the NYSE American Exchange that we believe applies to us. Not just we believe, but also the NYSE believes, which is why we will be applying to them as our exchange. So they do not believe that they need a rule change in order to list us, which is extraordinarily important because it saves us many months.
So
Thomas
Thomas,
can probably talk about
yeah,
what
exactly. I
the
was going to
actual
ask you, Thomas,
is.
to do Price Waterhouse and the New York Stock Exchange just let anybody do this?
I wish they would. It would make life a lot easier because, in theory, you could go to the NYSE, the NYSE website, and download all the application paperwork. You will also find out that the application paperwork that they have posted there is not entirely complete. And so you can kick off a process with them. But whether you can actually go through a process is another question. Um, the PwC, as well as any other, not only just Big Four auditor, but any reputable auditor, has a rigorous client acceptance process. They dig through your documents, they dig through your corporate entities, and they try to uh, figure out if there's any sort of undue risks and whether they want to avoid you or not. Because the one thing that people may or may not realize is that auditors and law firms have an additional amount of liability because they have to provide certain certifications or opinions to the Securities and Exchange Commission. And so, when an auditor is looking to bring on a client, like PwC, they have to, and a client like Permito, they have to dig a lot more deeply because they know that this is not just an audited set of financials; it's an SEC set of audited financials. So different standard, and that's the same case with the exchanges too. In theory, anyone could apply, anyone could attend to apply. Um, Obviously, we can't comment at length about where we are in the application process, but let's say that we are actually formally in process and working through. It does take a fair amount of time.
Yeah, it
Yeah, and
takes
just for
multiple meetings.
people's edification to understand kind of what these timelines look like, and these are quick, by the way. We engage deeply with both PwC and the NYSE, basically starting in December with NYSE having a kind of fun meeting in early January. So it's been a wild ride, and they've been, I think, both excited about what the kind of Bermuda products really bring, because it's not just the 3 to 6 that we're going to launch with. It's those other 79, 80 additional companies, creating an entire new way to invest. So Trent, something you say a lot, and I'd love you to unpack it a little bit. Why do you say that if you want to invest in any company that has an AC and a DC, you got to now look at the AC and DC?
Just so right now, let's just take someone like a Microsoft, for example. A lot of people who purchase Microsoft stock are saying, I believe Microsoft stock is a good investment. Um, and without any look into, or maybe there's a cursory look into the dividend or the dividend yield or whatever. But right now, the dividend yield of 85 basis points doesn't really it doesn't really apply anything to anything that you're doing, because Microsoft has been like an 18 to 20% compound annual growth rate over the last 15 years in their stock. So you can't tell me that 0.8% is really going to sway your investment decision. So now what an investor has to do is they have to say, okay, I like the Microsoft stock. I like what's going to happen with them over the next 5 years. Now the question is precisely how do I want to own it, right? So the question is not do I want it? It's now how do I want it? If you buy the stock, it would be something akin to 80% of the value is in the appreciation component or the asset component, 20% is in the dividend component. If you just purchase the stock on the regular stock exchange. But now you can say, okay, I want 100% of my asset exposure in the assets, or I want 100% of my exposure in the dividends. Um, Maybe that's because you believe that their dividend is going to grow an outsized portion over the next 10 years because of XYZ, right? Some change in their governance structure. Or on the other side, you think it's going to grow an outsized amount from the asset appreciation side, but they're not going to necessarily return that capital via dividends. So you would buy the assets, and that would go up an outsized portion. But if you take maybe 100% of the asset component, then what you're going to receive is a higher risk reward, right? So you're going to be purchasing a great majority of the movements of the stock itself for a lower price, which means if the stock goes up, you're going to receive a higher percentage increase. So if you're trying to beat the market, that is what that is the way you would do it. If you're a hedge fund only looking for, total 100% capital appreciation growth. But if you're maybe an older investor and you're looking for income, you say, okay, I really like Microsoft. I don't think they're going to cut their dividend in the next 30 years. So I want to just buy that dividend because I also think it's going to grow greater than 5% or greater than 6%, whatever it may be. And so you're saying that's going to grow an outsized proportion and then aid me in my retirement savings, right? So you might that type of investor might say, I want 80% in the dividend and 20% in the asset certificate, right? They might flip it completely because that is the right exposure level for them. They already deemed they want to own it. Now it's just what's the right way to own it. So what we're bringing in is choice, and it's the choice and the exposure of an asset.
And staying on that theme of choice, talk to us a little bit about why and how you can have it on DTC and the New York Stock Exchange, or you can have it on Chia. How will investors think about that? What do we think is going to happen at first? What do we think is going to happen over the medium term?
So first of all, I like to call it kind of like the digital Hunger Games a little bit, right? So when we say that we would like to have this on the DTC as well as on the Chia blockchain, the reason I do that, not only is it the Chia blockchain is much less administratively burdensome, it has a lot of tools that I very much appreciate, we all appreciate, but it's not enough sometimes to say, okay, well, there's administrative capabilities, there's administrative benefits here. Um, because of that, then we're going to make this only blockchain. This did start out as an only blockchain solution, but then the more that we all thought about it, how can a blockchain truly say it's better if it doesn't prove it, right? And we didn't want to prevent everyone from investing in this if maybe they don't understand the blockchain, right? Or they aren't yet there. We wanted the blockchain to be able to fight it out with the traditional financial ecosystem and say, we're better for all of these reasons. Let us prove it to you. And so, um, yeah, that's one of the reasons that we wanted both to be available. In terms of, Gene, I don't know where else you would want to take that, but to me, that's kind of a core benefit to having this on both places. I hear a lot of people say, well, the blockchain is going to be competing with the DTCC, and it's like, yes, that's the way it's supposed to be done. You're not supposed to just win by virtue of the fact that you're there. You should have to beat the incumbent. And from everything that I've seen administratively, the blockchain will eventually win out, but it will have to prove it at scale and at size and under a significant amount of burden from a truly global financial asset.
Well, and the important point too is that the price of administering the service really does differ between the two. So, if you're holding on DTC on the dividend certificate, you'll pay twice as much in fees as you will if you were to move to the blockchain. And to kind of dissuade, I think, some confusion, moving certificates between, say, the New York Stock Exchange and blockchain will be free. It may take about a day, but there's no real cost. In fact, it's the easier direction. Moving back may have a nominal fee, but it's not going to be like a percentage fee. It's going to be a cost of doing the administration because it's just harder on DTC. It really, really is. And when you're talking about a financial product, cost really, really matters. When you're talking about compound ongoing returns, and so we think that those advantages will come right straight through in the price.
Yeah, basically, to paraphrase what Gene is saying, in order to truly create an equal system, we have to pass on those benefits, those administrative benefits that we receive in cost to the investor base, and we do so by lowering our fees. which align with that, so that it is a clear balance. It's not that blockchain investors are paying the fees of DTC investors. It's that each side is paying the fees of their own chosen system.
Yeah. So one of the questions that came in from Discord is when, and so I'll just kind of take that and say that, our current best expectation is that we're able to, go on a roadshow and get effective sometime this summer. The nice thing about the Bermuda products are that it's a bit more immune from bad market conditions, just because these big blue chips, they're trading, you're making your decisions about the blue chip from a kind of investment risk perspective, and it's not the Bermuda infrastructure or tools that are going to be different there. So even in a down market, all of a sudden maybe the asset certificates are more interesting because they're better to short, for example. But the point being that we're not as worried about that. It's not nearly as sensitive as, say, like the Chia Networks offering would be independently of all this. So that's kind of the win.
At the end of the day, the when is going to be determined by investors.
Yes, it's important to point out that that's a key issue for us as well, is that we don't want these launched until we're all confident, both our banks, our market makers, all the partners we've already talked about, that these will be liquid on the first day. Because once they are liquid, then you get back to what we were talking about earlier, where all investors now have to consider this when they're considering an investment in any of these underlying assets.
Yeah, prior to being truly globally liquid, that's not necessarily true, because there's other risks that are involved with owning it outside of just regular Microsoft. So we're trying to reduce those as much as possible.
Yep. So Trent, let's use a hypothetical. Let's assume that, say, Microsoft had its current dividend, but was only trading at 300 total. Can you give everybody a sense of, kind of the ranges we think that the dividend certificate would trade in? And then, how does that affect the asset certificate? And then what makes that all actually work at the end of the day?
I mean, look, I think there's a number of ways that you can run analyses to come up with a value. These are all pretty well known in finance. Whether it be a growing annuity model, whether it be a kind of a notch-based model, which may be something that's more similar to what a bank would do.
Explain for your non-financial crowd what a notch-based model is.
So a notch-based model is, if you look at every credit rating of a company, whether it be AAA, AA, et cetera, every single time you move down, it's called a notch. And so what sometimes happens is when a company has a bond, it'll be rated at something. And when a company has maybe a preferred stock, it gets rated at something else. And the amount of rating difference between them is what we call kind of a notch spread, right? So for instance, a lot of companies that have publicly traded debt as well as publicly traded preferred stock, it'll be something around a 4-ish notch spread. But if we also look at the difference between investment grade bonds and high yield bonds, we'll say that is that's about a 6-notch spread. So a 6-notch spread in the bond markets is something around 2%, give or take, about 2.1, 2.2%. Depends on the day. And so if we take Microsoft, for example, or a company, for example, that has a long-term bond yield of 5%, and we add 2.2% to that, that would be about 7.2%. And then a 7.2% effective bond yield, right, would, if you break that down, right, and you say, okay, what would that be if it had the same if it had the same tax rate as a dividend? We would say, okay, well, that's around post-tax yield of 4.6%, which means on a pre-tax basis, it would have to be something like a 5.75% yield, which at a $3.30 or something like that sits somewhere around $50. If you do a dividend discount model, it obviously depends on what you determine a value is, what you determine growth is, number of periods are, discount rate is, etc. But from a broad range, we can say it's somewhere between $50 that I just said and $55 or so. And so what that means is if a company was trading at $300, you say you could buy it at $250, right? If we're trading at, if the dividend is trading at 50, then if we increased $300 by 1%, we would come up with a value of $303. So then if we took the $303 and we said, okay, so 253 divided by 250, and what's your percent increase there? You would get a percent increase of about 1.012, right? So that's about a 20%. It's about a 20% increase to your stock, which we call natural leverage. So you have 20% natural leverage trading at around $50 on a $300 stock. That's what each side would come out to.
And so talk a little bit about how the mechanism in the market works to make sure that this kind of stays, in the realm of where the underlying stock is trading.
Well, I think everybody has seen that like create and redemption feature that we have. They've also probably seen inside of our filings that we'll always have one underlying share to one asset certificate and one dividend certificate. And so what that means is at any point in time, if you come to us with an asset and a dividend certificate, you can get a share of Microsoft. Whenever you come to us with a share of Microsoft, you can get one asset and one dividend certificate. And what that does is if the market for the asset and dividend certificates ever gets out of line with the combined value, their combined value ever gets out of line with the underlying value of the stock, it will incentivize either creations or redeems, depending on which way it was out of line, in order to bring that back into line with one another. So that's what a lot of us would call an arbitrage mechanism, but it's a mechanism by which the public market can right itself between the two distinct markets.
Good. Thomas, I've got a question coming from Discord again for you. So, looking at the most recent 3 filings, there's not a lot of changes. Is that indicative of a good or a bad course through the SEC? What do we think about the kind of critical path to launch?
Boy, that's a hard one. There are definitely not a lot of changes to the filing. I think the SEC comments have been, I don't want to say more generic, that's not the right word. It's more high level, to understand the product, to understand, how this is or is not an underwriting, how we're going to market with it. Are there concerns they need to be, that they should be worried about and with the particular instruments in the ACs and DCs? And so I think I'm trying to channel a little bit of my inner Gene.
I was going to say,
I put you on the spot, man.
I say that because, look, we've been staring at the 2 comment letters that came back for the Microsoft Trust. We've gotten a total of 20 comments in there. 3 of those comments were introductory and were not comments at all. So really 17. Some of them were repeat comments, and we have an internal over/under going on between Gene, Trent, myself, Misha, Chris, and some of the others, and Gene's always taken the under, and like it or not, unfortunately, he's always won so far. So I'm trying to channel my inner Gene, and if I'm looking at that as the data,
may not be future outcomes. Go ahead.
Yes. So if I'm looking at that as kind of the current data set, I'm feeling pretty good. I do think that the SEC realizes, number one, we're a serious group of players. This is a serious product. This is not just we're making something up to throw spaghetti on the wall, but we have the players, we have the right partners involved. We've been naming them in every subsequent filing. So I'm feeling very positive. And we've also had very positive conversations with the SEC, with our examiners as well as with the crypto task force, where they've gone pretty deep with us, and in a way that I consider super positive. I know not everyone likes the Eye of Sauron looking at them very carefully, but we do, and so I happen to think fairly positively. I don't want to speculate on timing at all, but it's hard to not start to want to channel my inner Gene when I'm looking at these things. Not a lot of changes so far. Will there be more comments in the future that we may have to update? Sure. But if you track, if you use any software to kind of track the changes and create a red line for yourself, you'll notice the risk factors haven't changed a lot because the SEC just said, we want a particular risk factor, drop it in. So we did. And it's actually an extremely common sense one. It was not complex at all. So
It was
look, we're
so
feeling
simple. We
great.
weren't sure that's what you're asking for.
Yeah, we actually thought there was more.
Yeah. I would also say that, like, just in general, right? The SEC always reserves right to continue to comment, right, as they should. I think we took a tact where we were very factual, and we are very factual inside of this agreement. And I think kind of the going back and forth that we've got here with the SEC might show that. Again, look, we still, just like as we told you multiple months ago, we do not have a crystal ball into the SEC. We do not know what they're thinking. We don't know precisely how this process is going to work. What I can say is the SEC has been incredibly thoughtful in their comments. They have been incredibly on top of things, and they have also, I think, just in general, been thoughtful and complete in everything that they have given back to us. So I do not feel like anything has been pernicious. I do not feel like anything has been being held against us for virtue of putting something partially on the blockchain. I don't feel any of that. And I just wanted to make that clear to a lot of people, because I think there's this statement that's been out there that, oh, the SEC is doesn't like crypto, or doesn't like this, or doesn't like that. That has just very simply not been my back and forth with them. I think they've been very reasonable and intelligent and thoughtful. And so just wanted to make that part clear. We are working together. This is a complex product to make more simple for retail consumption. And we're trying to be we're trying to ensure we're doing that in the right way, which means a lot of conversation with the SEC.
Yeah, and I'd add two comments about the SEC. That comment that Trent was making doesn't apply just to this administration. We were active with the CNI S1, and you can now see that on the Crypto Task Force webpage because our confidential filing was FOIA'd. Long story. But that's an important point. And the other important point is, it relates to a question I kind of got, are these partners or are these vendors when we're talking about Pricewaterhouse and New York Stock Exchange? And, the answer to that is it's not really a vendor. And the reason I say that is that the SEC, each one of these partners wants to know that everyone at the table is going to be highly reputable and sophisticated and able to go execute and perform the kinds of things we're talking about doing. When we sit at the table, we've got a former hedge fund manager at Size and Misha. I've been a former public company CEO. Trent and Chris, both investment bankers of some repute, or renown, I should say. Sorry, Trent. And Thomas.
Repute? What are you going for there?
Yeah, I know. I missed that. And Thomas is, this will be what, your fourth IPO filing, Thomas? Something like that? Fifth?
I think it's the fifth filing, and this will be the second public company, role I've had. So, yes,
that's right. Yeah, and so when you're talking to the New York Stock Exchange and you're saying them, hey, Pricewaterhouse has cleared our engagement letter, or when you're talking to Fidelity about hey, look, we expect it's probably NYSE. If you need to chat with them, you can. Skadden's got this for you. All of that. It just makes it a very different conversation. And like there was an attempt at stock tokenization in 2016, I believe. And the parties behind it were at least public company experience, but they were, I don't know, had a reputation. And so the SEC and FINRA and others were much more, I don't know, careful to a point where it made the offering not very interesting, actually. And we've experienced exactly the opposite of that. We have had a very professional interaction to the point where we're in some ways a resource to the SEC on a couple of these questions. So, in fact, when Thomas is telling you there's only like 17 questions, well, a bunch of duplicates of them were also just questions they had from somebody else that they kind of only thought tangentially relied to us, but they would like our opinion on. So, it's a really interesting place to be where, we have some advisory role in a sense in helping them understand, what these technologies can do, how they can comply. I do think that we're one of the more sophisticated teams thinking about how the last couple hundred years of, regulation work and how we can leverage that to, deliver a product that complies with the law of the day.
And I think one thing I'll just add in closing before we move on to the next topic is the SEC is listening to us not just in an advisory capacity. They're listening to us and our different takes on the technology as well. Like we've gotten very in the weeds. So it's slightly educational on the Chia blockchain, but also slightly educational on the rest of the industry and how different structures work, how centralized smart contractors work, centralized smart contracts work, or maybe they don't, or whether they require licensing or not. And the architectural differences, in my mind, make a huge difference. So for those of you who've seen my little tweet thread about Chia versus Circle, just on some of the technical things that come out in an S1 filing, that's the kind of level of discussion we've had with the SEC.
So, guys, I just want to make one thing clear because Thomas, great point in bringing this up. A lot of you guys have figured out Chris and I were CNI's bankers at CS when we wrote their S1. Okay. You'll see that there is a fairly significant blockchain 101 section, which is rare to put into a document like this. It is long, it is detailed, it is well researched. But I want you guys to know I've had this idea for Permuto Capital, this product. I had this idea a decade ago. I started thinking about this 10 years ago. And where we are right now, I knew all of the data that I put into that blockchain 101. I knew about proof of stake. I knew about proof of work. I knew about proof of space and time. I knew about the capabilities of each blockchain, of why to use blockchain A over blockchain B over blockchain C, where the easy route might have been because there's distribution capabilities, et cetera, et cetera, et cetera. And I chose to work with Gene, right? I love Gene, right? I love the Chia team, and I think it's great. The only way I saw a viable way of putting this on the blockchain ever was through what Gene, Bram, and the team built at CNI. There are a multitude of reasons behind that. But a lot of it actually lies in the minutia of what Thomas was saying. A lot of people here might think that the SEC doesn't care about this or doesn't care about that. They care about everything. Every little piece of code that could change X, Y, or Z, they investigate. Because it is their job to make sure things can't be manipulated. It is their job to make sure that securities offerings are done properly. That's their job. And so me with that knowledge, I was trying to, when I was bringing Permuto to everywhere else, to find a partner to do this with on the blockchain, there was only one partner I asked, and it was Gene. And if Gene said, "No, I don't really want to do it," I would have just done it on DTCC. We're learning why that's probably not a great idea, but I just want people to know we were methodical about the creation of that S1 over a 6 to 7 month period where we did all of that work to be incredibly right down to the engineering level, which does not happen in S1s. And we didn't receive that many comments about the blockchain 101, right? In fact, it's fairly clear that people have read it today inside of government agencies because sometimes people quote it back to us, which is pretty cool. But just so everyone knows, that was purposeful. That we did all of that, and that minutia is very important to anyone on the finance side.
Yeah, and I would add there's an interesting side effect of that entire process, which is that getting an IPO greenlit as a bulge bracket firm like Credit Suisse means that like most of the investment bank is involved at the senior levels. And so a whole lot of very interesting folks who were dislocated by the failure of CS had greenlighted the Chia IPO with all of that background and technical detail. And so in a lot of situations where we're out talking to partners that we're going to be working with on this project, we're talking to old friends effectively who were part of that process and know it intimately. So that's been a big leg up in a lot of what we're doing. And I think you'll get to hear a lot more about where that's really coming in and kind of the next wave of the partners we're going to be talking about.
I think one thing that's fun as well is the fact that the idea that Trent has, it's not uniquely his idea in the sense that no one's thought about in the past, because people have. One of the companies that we're thinking about listing had thought about trying to figure out a way to split this as well and couldn't come up with it. And some of the law firms that I've been speaking with, because obviously I have to have relationships with multiple law firms. It's not just Skadden. And so one of those law firm partners who I was speaking with this past week mentioned to me that someone else had approached him with a similar idea maybe 10 years ago. But one of the issues, one was a regulatory hack that Gene came up with. But the second was no one also just found a way to build it right. Like this was not something easy to productize. And so it really does take the coming together of regulatory and policy plus tech and engineering. Like all those pieces have to be there or this thing cannot exist.
Yeah, there's actually a blog
also,
post. Go ahead, Trent.
Yeah. We had a rigorous belief as to where we wanted to go with this from the beginning, and we didn't let anybody change that belief in us. There were so many people along the way who asked us to do things that would cut a corner, and they would say, well, if you do it like this, it'll be a heck of a lot easier. If you do it like this, it's going to be pretty simple for you. You can fit in under that rule. But in doing so, we would have made a worse product. And we burnt, Gene, what would you say, 3 months?
Yeah, about 3 months.
We burnt 3 months going through people, and they told us the ways it was possible. And there was just a belief between Gene and I of there's no way. There's no way that's the only way it's possible. And we kept pushing. Gene obviously went and read the 40 Act and figured it out. But yeah, it was a dogged reliance on what we believed would make a viable product for the market. And we didn't let anybody else tell us differently.
Yeah, and that goes into what I was about to say, which is a blog post that I know I'm going to write that I'm struggling with the title of. It basically comes down to that the only way you can rebuild the rails of the financial future is to deeply understand both the existing legal environment and the technology. And if you don't have both of those things, technology isn't designed to fit well within the regulatory environment, then you're not going to be able to do it at the scale that's going to make a difference. And, we joke in the Discord channel, your size isn't size. We've currently got, I think, a 1.3 trillion addressable market at 5%, Trent?
1.46, yeah.
Okay. And by the way, we do not expect to stay at 5%. 5% is a historical thing from probably the 1970s that has nothing to do with us, but there's a rule that's sitting there and we're going to use it for the very short term. But the point being, like, we're expecting billions and billions of dollars here and moving towards trillions. And then ultimately, I think it's DTCC that says they move 2.5 quadrillion a year. Well, we want a slice. Question from Discord. What can farmers do? I think the biggest thing farmers can do is replot when it's time to replot. I think Nakamoto coefficient is the one item that I want to see improve, and with the new plot format coming, I think that's going to be one of the biggest things. Obviously, make sure you've got a full node that can keep up. But the thing is, that's getting easier and easier. My Pi 4s are doing better than they've ever done before, even with more demand. So those are the things farmers can do. It's really, let's make sure that we, build something that's going to be long enduring and high Nakamoto coefficient with truly peer-to-peer, which we have almost all those things and a nice path back. Also, for those of you who are asking, just because I know there's a bunch of Chia farmers here, we're going to be only a couple weeks behind our Q1 kind of timeline for getting the first chip drafts out. But Dr. Nick in Plotting and Farming on Discord has actually even put a little post up for a status update. But you'll be getting a lot to chew on very shortly. Well, we've got about 18 minutes left. We do have a hard stop at the top of the hour. If there's anybody who wants to ask a question, please feel free to raise your hand. I'll try to keep an eye on the logs here and let a couple people up. Thomas, what was your favorite happening between the last filing and this one?
Well, can I share some inside baseball?
Sure, shoot.
This one's fun. And so, obviously, NICE is not the only exchange we've been talking to. And so we talk to, and we continue to talk to other exchanges. Obviously, this is a process. Everyone's trying to figure out how to do it for the first time. And so we were all in DC together last week. And Trent was getting worried about about a phone call that we had the following day with a different exchange and trying to get ready for that. And while I was on the road to get dinner, and I was at a separate dinner from Gene and a separate dinner from Trent and Chris, I got an email from our NICE team saying that I should call them. So I called them up, and I'm on my cell phone in the car discussing this. And and so what happened was I decided to hold the news that NICE American wanted us to go ahead with the process. And so, I thought about setting an internal chat to Gene, Trent, and some of the others saying, hey, we got some good news. But I decided to hold it because I knew I'd see them in a few hours anyway. So I held the news. And, we're having drinks that night finally. We're all together. And Trent's ready to pull me aside and either, give me a tongue lashing or just dump his worry on me. I wasn't sure which one. But he said, look, we're talking with the other exchange. We really haven't coordinated this. Can we coordinate this? And I said, so I look at everyone and say, hey guys, I have some half good news to share with you. And they said, what is it? And I told them, and, I think Chris gave me a hug. Trent gave me a fist bump. The amount of relief that flooded off of Trent's face was massive. And so, yes, I did hold news for about 3 to 4 hours without telling them. But that was my favorite moment in the last 2 weeks.
So if you guys were following along that tweet storm the other day where I said, and then it happens, that was this.
I almost freaking died.
Trent the stress monkey.
See, this general counsel has a sense of humor.
News is what got me.
Say that again, Trent?
Yeah. I said the half good news is what got me. So
it was half because they didn't say yes. You're approved now.
Yeah. Fair point.
Most people don't get invited. Everybody, just know that.
So one thing that we could bring up, I know a lot of you that are in the Discord have heard me say our announced and unannounced products. Gene, do you have any comment on our unannounced products?
My favorite comment, which is soon.
I do think our unannounced products will be and then it happens, but when it happens, the product will just launch.
Just be there.
Yeah, it'll just exist.
Exactly. No, we have some fun things. Obviously, getting the Bermuda application, the Bermuda capabilities all built the right way. And Bermuda, for those of you thinking about it logically, is the first real customer of the Cloud Wallet enterprise side, because obviously the Bermuda website, all of its functional bits will be Cloud Wallet pass-throughs effectively. But once all of that is kind of built and shipped, and by the way, we're real close on all that stuff. It's going to be a fun quarter. Then we're going to be free back up to go do some even more fun things that will potentially be available in Cloud Wallet.
So I see a thing from Discord. Do you want me to take that one, Gene, or do
I
you
was
want?
going to ask it, or you can say it and answer it. Either way.
Yeah. So the question is, do we foresee Bermuda eventually issuing legacy shares on chain, and slash, or would there be a way to programmatically have a create redeem with the cats where an ACDC could be swapped for a legacy share via an offer file or similar mechanism? So here's what I'll say. When we give you the share, we have to give it to you to a DTC account for now. Hopefully that changes in the future. We don't have a means by which to basically give you back the share, but not give you back the share, right? Which is kind of what you're asking in this. Um, in terms of issuing legacy shares on chain, so the way I see it, once there are ACs and DCs in existence on the blockchain, it is very simple, or it is trivial for someone to construct a position that they deem fits their belief system in the underlying security. So to me, every single share that we put into a trust that we then allow this on is effectively allowing you to have legacy share exposure via offer files. So I don't fundamentally see there being any difference between what we are offering you and the legacy share.
Yeah, I would only add that the idea is not out of the question, but it requires the underlying shares to start trading on chain,
Yeah.
which will happen sooner or later, but not soon.
Yeah, that's what I was going to say. Is it requires the DTCC to really have a digital asset component to it that could fit into the Chia blockchain. I'm not saying
You
that's
mean
out of
like
the
the one we
question.
just built?
Yeah, again, like I'm not saying it's out of the question. We would have to work with likely the underlying share issuer um, to enable that and to hook in with their transfer agent to make sure those shares are properly classified inside of that transfer agent. But it sounds yeah, it sounds like it should be a simple idea, but this is the thing that a lot of people are running into in terms of tokenization as other people are saying it, which is okay, so you have to hook in with the TA, and then the TA says, well, why? Why would I hook in with you? And it kind of goes around and around in a circle. And that's why tokenizations at a level that we would be comfortable progressing with, um, it would be fairly difficult. And I'm not sure how liquid that would
Yeah.
be.
Well, and so one thing to say, in taking my Bermuda hat off and putting my Chia hat on, from Chia's perspective, we wanted to start with these large blue chip equities trading on chain because it can prove at scale that these can work. These aren't going to have liquidity issues as soon as these things are established at scale. And so this was kind of the look, if these big boys can do it, everybody can do it. And so from Chia's perspective, now kind of the next wave of folks we would like to independently tackle. It's not necessarily Bermuda's, go-to-market strategy. Bermuda's going to be after more high-end Wall Street stuff. We want to go to like late-stage private companies and smaller public companies and enable them to do this themselves directly, so that they could then be part of one market as well. Because there are certain exceptions and registration methods under the SEC that would work really quite well on the Chia blockchain peer-to-peer, but that people aren't really aware of or have been hampered because there wasn't kind of the quality of exchange that one market kind of automatically gives you. So that's something that you're going to be seeing from Chia over the kind of 18 to 24 months after the Bermuda launches, is really starting to go into these other categories of both public and private equity and making them semi-public and those kinds of things, because we think there's real opportunity to finally build some of those second market things and other things that just haven't happened. And that's because we have such a powerful one market using offers.
Hey guys, not sure if you can hear me okay.
We can. Go ahead.
Awesome stuff. Yeah, first of all, longtime Chia supporter. I think I started mining right after mainnet launch back in 2021. All of this news is phenomenal stuff, and obviously, I've just continued to invest more in Chia over the past 4 years, as you guys have kind of continued to prove that track record. My question here is, maybe a more basic one from the perspective of you guys, but I think it's something that a lot of people in my position kind of think about, as a peon in the grand scheme, right? Like I'm just Tommy, the citizen of U.S. from Pennsylvania. Um, Obviously, the future of one market is this world where, at least the way I foresee it and the way you guys describe it and how you allude to it is like this world where, Microsoft will be able to sell Microsoft stock or like trade Microsoft stock for carbon credits that they can then retire to offset, their carbon usage for the year. Obviously, like for someone like me, it might be hard to, be able to participate in this one market as just a common citizen and not be an institution. I'm curious, like, for someone like me, am I going to be able to, as myself, as a citizen, like a normal peon here, buy these, dividend certificates?
Yeah.
By the like, is that something that's going to be like by the end of the year? I'm able to,
Yeah.
You'll be able to do it the moment these come out. That's the whole point of an S1, right? So maybe we weren't clear with that. The reason this is big, actually, the NYC American potential listing here is big, is because what that means is you'll be able to go on Robinhood and buy it. You'll be able to go on Fidelity and buy it. You'll be able to go anywhere you want, any brokerage that you want, you can buy it. But what you can also do is you can utilize your XCH to go and buy it on the G blockchain, right? And so that can happen the first day when we commence trading. You can go and do that. You don't have to wait longer. You don't have to do anything like that. It all happens at the same time. You have the same access as any institution does. So
And
yeah,
you can like buy like half a Microsoft share for real.
Yeah,
you can literally go and buy a half a Microsoft share now.
That's amazing stuff. I love to hear that. Another quick follow-up thought to that is, and I'll let other people go up. I know we only have 5 minutes left. Quick follow-up thought to that is like, obviously when we talk about, these huge partners that you guys are bringing on and the future state, and, you want to do 5% first and then quickly move beyond 5%, all that kind of stuff. I think something that, people like me often think about as investors in XCH is kind of like, okay, obviously it's going to attract all this money into being bought for XCH because that's how you are able to interact with one market as kind of like your baseline cash is XCH in this one market. If I'm buying, these stocks for XCH, kind of who's the final holder of XCH? Because then in this ecosystem, couldn't that final holder of XCH be trading XCH for USDC? And, the ultimate price of XCH doesn't necessarily change that much in that scenario. If all this money's coming in as to XCH drives up the price of XCH and then is then immediately sold for USDC, I guess that's kind of my question, if you understand where I'm going.
I'll take a Trent, if you don't mind.
Okay, go ahead.
So there's a blog post I would refer you to, which is like, how do you value a blockchain? And it's really important to know that like the naive view that, hey, the only way the price goes up is if everybody holds isn't really accurate for a blockchain's layer 1 currency. What the layer 1 currency is a coupon for access to secure block space. And as long as we create a market demand for secure access to geoblocks, there's real value in XCH. Now, when you read the model, you'll see one of the key questions is, what's the propensity of people to spend it? And the answer is there's no obvious way to forecast that. But you can actually observe what people do on Ethereum, what people do with physical cash. And it gives you a really nice range of, hey, if it turns over as much as physical cash does, it would be price X. If it was only as much as Ethereum did, it'd be price Y. And so, don't be afraid of the chain actually doing transactions. And in fact, it's already kind of coming around some of the Bitcoin folks that digital gold isn't enough if you can't transact with it. And so, anything you see that causes trading for real value is good. And that's where the value comes from. It's the one thing that there is a limited supply of is secure, decentralized block space.
So a way to think about it is, I haven't seen anybody else actually look at it this way, but I think Gene and C and I do. Are you actually a currency, right? And the way C and I views XCH is it's currency. So is the US dollar valuable? I would say yes. But then a lot of people would say, well, then why is a dollar only worth $1? Right. And so now you get into some of these circular arguments. So how much is currency of the most valuable economy in the world worth when you can't just keep printing more? And I think that's a really interesting way to think about what's being created here. Because if we, for example, all come together and say, hey, look, this is really valuable. This is really all of these transactions, they're running the global financial markets. Okay, so how valuable is the payment chain that allows for the running of global financial markets? And that's what XCH really is.
That makes sense. That's a great answer. I'm going to have to find that blog post you mentioned, Gene.
I will throw it somewhere where you should be able to see it. Let's put it that way.
Amazing. Thanks. It was great being able to chat with both of you. Thanks for your time.
Yep, thank you. Let's see. Thanks to Thomas, who has to drop. We're not much longer ourselves. Trent, you get the parting words. 1 minute. What's most exciting right now for you?
Investor conversations, just conversations with how to make this easier to digest for everybody. It's great that we've got our group, I believe, and our group of partners, and I'm glad I can call them that. And now it's just the blocking and tackling of getting a pitch together and going and talking to people, which is a really exciting place to be.
So everybody, thank you very much. We're really excited about PwC and the New York Stock Exchange, but unfortunately, one of those partners needs to talk to us in the next 60 seconds. So with that, we're going to take off. May see us again a little bit over the weekend, but, obviously around in spaces and X generally. Thanks again, everybody, and have a great evening, morning, night, wherever you are. Bye-bye.
Thanks all.